Hello, and welcome to the April market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. We had another great month for financial markets in March. U.S. markets were up. We saw the S&P and the NASDAQ up about 2%, and the Dow was up less, but that was due to one stock, Boeing. When you look internationally, both the developed markets and the emerging markets were up a bit for the month, but they were also up significantly for the quarter, as were U.S. markets. U.S. markets were up about 12 to 15%. International markets were up about 10%. It was a good month to top off a great quarter. And the question really is, why did that happen? And even more to the point, can it continue? It's actually a little bit strange that things were as strong as they were. Because when you look at the fundamentals, we've actually seen some weakening. Here in the U.S., for example, if you look at confidence, we saw confidence take a real hit, both consumer and business, after the government shutdown, after the pullback at the end of last year. And even though we saw a bounce, we've since seen it come back a little bit. So there's a real question about how confident the economy is going forward. When you look at job growth, we saw good results from the first 2 months of the quarter, but then we saw a terrible result last month, well below expectations, and that rattled markets. And then finally, when you look at the yield curve inversion, which generated so many headlines this month, there's a real concern that because long-term rates are now below short-term rates, that means a recession is coming. And that might indeed be true. So when you look at all this, it's small wonder that on the corporate side, analysts are now expecting earnings growth to be much lower than they were at the start of the year. In fact, they've marked it down by the largest amount since 2016. So when you look at all this, there's a real question, can we continue this growth, or are the good times over? I don't think they are. And the reason for that is all of the bad news we've heard, all of the headwinds we have, suggest that growth is slowing, but slow growth is still growth. We don't see the economy rolling over, and in fact, there's reason to believe it might improve. Confidence, for example, has bounced back a bit and is still at high levels historically, both for consumers and business. We've seen weak job growth in months before this recovery, only to see it bounce back, and the long-term trend remains very strong. When you look at lower rates, lower interest rates, in fact, that's going to support the market. That's going to support the economy. To give you an example, when you look at housing, which is weakened, lower rates mean lower mortgage rates, which makes housing much more affordable. And we're already seeing signs that might help out. And even on the corporate side, it's normal to have analysts dial back their expectations. But when the actual news comes out, typically you see about 3/4 of companies beat expectations. So not only are we doing pretty well, if not as well as we were, but nonetheless, chances are we're going to do even better over the next month or two. Can I guarantee that? Of course not. There's still risks out there, politics, economics, but at the same time, we do know that the market is rising and it might well keep going up. And in any event, things continue to look fairly solid. What will happen? We'll find out, and I'll talk to you about it next month. Thanks for watching.